It's a big day for the Flipkarts and the Snapdeals because market regulator SEBI today ushered in some big bang IPO reforms, allowing startups to tap the market with easier disclosure norms. There will be an alternative trading platform for these new age companies which will be free to use the IPO money the way they want to. SEBI chief UK Sinha says that the new norms will make sure that Desi startups list in India.
In fact, it's a complete overhaul of the IPO process by the market regulator. For instance, the listing time has been halved to 6 days from the IPO closure, while institutional investors will get the maximum buck for their money in IPOs. More importantly, the fast-track share sale window has now been opened up for mid-sized companies with market value of 1,000 crores and above. SEBI's game-changing reforms for the primary market, that's our top story on Business Tonight.
Big day for the Flipkarts and the Snapdeals. Market regulator SEBI has set the ball rolling, unveiling an alternative trading platform for startups. The whole idea is to give these new generation companies an all-new fundraising window with easier disclosure norms. So there is no need for a profit track record and no valuation metrics and no restriction on the end use of the IPO money. Even the lock-in period for promoters has been reduced to 6 months from 3 years for other companies. The only condition is that the minimum investment in startups should be 10 lakh rupees. The SEBI chairman says Indian startups need not go abroad to raise money.
Most of these startups, we are thinking of listing outside India because they felt that the regulatory regime in this country was not favorable for them to get listed in India. So we have made a very special provision for these startups.
But IPO trackers are not quite convinced.
There are a few companies who would like to come through this route, but we are not talking of hundreds of companies. There could be thousands of startup companies in India, but A, are they all ready to come to the capital market? B, would they qualify with the SEBI norms of minimum, of 25% shareholding or more being held by QIBs?
Investment bankers, however, gave a big thumbs up to the IPO norms for startups, saying the market regulator has taken into consideration most of their concerns.
If you look at the profile of many of these businesses, they're not going to be instantly profitable. When they go on the main exchange, the norms are different. So when they go on this platform, I think that's bound to be diluted. The second and the more important we heard on the TV today was about use of proceeds. I think for many of these companies, a diluted or a simple skeleton use of proceeds will be very facilitative.
It is a fine balancing act by SEBI which has kept retail investors out of this trading platform, while providing new age companies the much needed flexibility to raise big money. It's a different matter altogether whether the Snapdeals and the Flipkarts raise the India pitch. With Vijay Ganesh and Iyer, Krishna Kumar, ET Now, Mumbai.
I think SEBI is certainly sending the right signals and making the right noises. However, in my view, IPOs are driven primarily by liquidity and institutional investors. So I'm not sure that simply by having another institutional platform for trading for startup stocks, you'll suddenly see a flurry of IPOs. Firstly, I think, we already have a question of liquidity on our current exchanges. So I'm not sure that having another platform really works. I would have liked to see more along the lines of what we saw in the US with the Jobs Act, where it just became, less cumbersome for startups to IPO on the existing exchanges, which already have liquidity.
I agree that there is a lot still need to be done, and we should not assume that everything will become good tomorrow and all companies will start listing in India tomorrow. It will also have jurisdictional issues. It will mean, the investor base being there, etc., etc. But once these things start falling in place, I am sure that the momentum will eventually pick up and things will probably become comparable, if not better. Most of them have actually already gotten to a stage where the business is there, and now the IPO is trying to kind of bring liquidity to the employee base, which largely owns the shares in the company, and to create some liquidity for the investors who have invested in the early stage when the company actually needed the money. There are challenges around, the assumptions that the company has to be profitable for a minimum period of few years before you can go public.
All the other decisions taken by SEBI board today clearly was an aim to ensure that the whole of IPO process is simplified. At the same time, the required flexibility is given when it comes to processes of OFS. Firstly, on the whole of IPO timelines, the timelines have been halved by half, that is from T+12 to T+6. beginning for all IPOs from January 1st of 2016. Also, the ASBA has been made mandatory for all the investors putting their money via an IPO. But on the other hand, SEBI chairman was very clear that this is just the first step. They are not declaring this as e-IPO because in a country with the length and breadth of India, the paper IPOs will still continue because there are many areas which are not digitally connected. That is the reason they are not making the e-IPOs mandatory. Paper IPOs will also continue for a while, but clearly the first step has been taken to ensure that IPOs are paperless, but it was some time away. Having said that, on the other side, on the OFS, clearly tier 2 companies can also now participate because companies with a market cap of 1,000 crores can also now look for the OFS route. On the route, OFS as a whole, a lot of flexibility has been given, particularly the PSU companies, the government which is going in through divestment process via the OFS route always feared stocks getting hammered as and when they are declared that the OFS would be opted for a particular date. Now they have, SEBI has said that the T-minus route will maintain, but that would be not based on trading days but on banking days. What does this essentially mean? Clearly SEBI is saying OFS of a PSU company say can be declared in the exchanges to the public at large on Fridays, and the OFS can take place on Monday. So clearly the whole objective has to been to ensure that the whole processes and timelines and the ecosystem for fundraising in the Indian capital market is simplified, thereby ensuring that the IPO market and the OFS markets get revived once again.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.